Good morning, everyone. We're so grateful to have you join us this morning. We're going to be talking about the Payroll Protection Program and the EILD and all kinds of acronyms that the government, that we've all become familiar with over the last few weeks. First, we'd like to open in prayer, and then I'll introduce our panelists. So, Father, we just come in Jesus' name, and Lord, we know that you rule and reign over this pandemic and over the world. And Lord, we're so grateful we can turn to someone who has all the answers. But Lord, there are other answers we have on a natural scale that you have the answers for those as well. But there's information that people are wanting, questions that they want answered. And so, Lord, we want to answer those questions today and provide that information. So, Lord, we ask that you would just be with us, that you would lead and guide this conversation today. And Lord, we just thank you that we have someone to turn to in these turbulent times. And so we bless your name today, and we thank you and praise you in the name of your Son, the Lord Jesus Christ. Amen. Amen. So once again, thank you for being with us, those who are on the webinar today. We've had obviously a lot of interest in these subjects, and so we had over 200 people last week, and I think we have 250 people signed up today. And so we have some experts that are here to help answer your questions. And we have Annie Fairchild with A. Fairchild PC. Annie is a CPA and owns a large accounting firm here in the Dallas-Fort Worth area. And then we have John Knight. John is the Senior Vice President of Commercial Lending at First Financial Bank. And he's with us here as well. He's been working probably 16-hour days for the last 2 weeks, but he's got a lot of answers to the questions of those who are putting in applications and wondering what's happening with PPP or EILD or EIEIO. So anyway, so that was a joke about Old McDonald. So anyway, so John, Annie, thank you so much for being with us today. We're so grateful that you could spend your time with us. For those who are going to ask questions, we ask that you use the Q&A tab, not the chat tab. It's just easier for us to process questions on one place, and otherwise we have to put back and forth between the Q&A and the chat, and it gets very difficult to do that. So please do not use the chat. Use the Q&A button if you would. We will send this recording out on the for those who request it, and we'll talk about, may send it out to anyone who's on this webinar, but we will send it out to anyone who requests it. So we are making a recording, and we will send that out. So we want to go over the payroll protection program. I think everybody in America is probably familiar with this by now. Everybody uses the terms PPP, and so we're not going to talk about that a lot. I think most people know. We're going to cover it very briefly, and then we're going to cover a couple things. There's this payroll, the payroll tax credit that most people are not aware of. And so we want to talk about the very, very significant dollars that you can get if your business gross receipts have gone down by more than 50%. For example, the payroll protection program is for anyone with an organization of less than 500 employees. But there are many organizations, I've talked to several this week, that are actually doing better because of the pandemic, but they're still eligible for the payroll protection program. And I know people who've applied. And so there are people who really maybe don't need the money as much as someone else, but this payroll tax credit is specifically for those businesses. It's targeted at businesses that are really suffering because of the pandemic, and it's tax credits. You get offsets against your income, offsets against your revenue, and offsets against, and the offsets occur in the area of payroll taxes and Social Security taxes. So it's a huge credit that really no one's talking about. So we're going to talk about that a little bit today, and several other items. There are other things we're really not going to talk about. They're just out there on the internet. There's lots of information. You can go to the SBA. There's so many places that are giving information today. So we're not going to talk about some things, and mainly we're here to answer your questions. So Margot, if you put the slides up, this is Annie Fairchild has prepared these slides. We're going to talk about a little bit, maybe ask a few questions. Mainly we're going to talk about the payroll protection program and then the economic injury disaster loan. So, so advance the slide. And obviously it's under businesses under 500 employees, operation as of February 15th. And what happens is, and for most people, it's your payroll in 2019. You take your average monthly payroll, and you can get a loan for 2.5 times your average payroll for a month in 2019. That establishes your loan amount, and then you can take 8 weeks of payroll costs against that loan amount, as well as some other costs. Some of those costs are obviously salary, wages, commission, compensation up to $100,000 per employee. If you make $150,000, you can't use $150,000 value for you. You have to use it for you have to use $100,000 value when you calculate your average payroll cost in 2019. But healthcare benefits, state and local taxes, things like that can be offset. Mortgage interest or on any debt that began before February 15th, rental payments, utility payments, things like that. And then, of course, if you let people go, the whole point of this is that the government, if you keep your employees on and you don't, and your employee expenses at least 75% of your expenses that you drew down the loan against, the government's going to forgive that loan, okay? And so, but you have to keep your employees on through June 30th. If you reduce the amount of employees, then the amount of the loan that's forgiven by the federal government, by the SBA, will be reduced as well. Okay, the economic injury disaster loan. Now, this is a very interesting loan. This is a loan that has to be paid back. It's not going to be forgiven except for this $10,000 that you can supposedly get within 3 days. You apply to this to the SBA directly, not a bank. And is that right, John? Am I...
You're right, Steve. And hey, what I'd love to do, there's a good number of people on the phone. I have not met a single person, and I've talked to hundreds, if not over 1,000 people in the past 10 days since this program's been open, and I have not talked to a single person that's received $1 from the EIDL. So if you're on this call and you've actually received money, please just post a note in the Q&A. We got our $10,000 grant and the loan advances, to be coming. I just want to hear if it's actually working. But 100% right, Steve. You go directly to the SBA to make application for this. It's outside of any of the banks.
It is a loan up to $2 million. And what's the interesting part about this? If you apply and you get the $10,000 and then you get turned down for the loan, you get to keep the $10,000. So you're not required to repay it. On this loan and the PPP, there's no personal guarantee, there's no collateral. So the government's trying to help us here. It's our money, of course. And so they're advancing billions of dollars to small businesses to try and help keep them going. So obviously you can see on your screen, we're going to send these slides out, and so you can get those. And so that's the main thing you need to know about the EILD. If you get a loan from the EILD program, you're not able. You have to reduce the amount of a PPP loan. In other words, you can apply for both, but one will help offset the other. Okay. Here's a couple of things that are out there that we're not really going to cover, but there's the Pandemic Unemployment Assistance Program. The government has made some huge amounts of money available for unemployment. I'm talking to lots of business owners, and some people are laying off their employees because they think it's a good time to lay off their employees. If your employee makes less than, say, $70,000 a year, they can get the same amount of money in unemployment for 4 months, and then they've extended benefits out for 39 weeks. The reason they get the same amount of money is because the government has said, if you are unemployed because of this pandemic, then we're going to add an extra $600 a week to normal unemployment benefits. So the unemployment benefits are much more significant than normal for this 4-month season. So it's something you may want to look at. I've talked to people who are laying people off who are getting the PPP loan. And so it's reducing the amount of loan that's forgiven by the government, but they just don't feel like they're going to be able to keep their employees on. And the unemployment benefits are so generous, they feel like it's actually better for the employee to lay them off than to keep them on. Now, we're encouraging people to keep people on if they can. We feel like it's the Christian thing to do, but that's a decision that you can make that makes it easier to make that decision because of the very, very generous unemployment benefits that people are getting right now. So there's there's a couple other things here. We're going to cover one in particular. So if you could advance the slides, Margot. The benefits were 26 weeks. It's now 39 weeks. Let's go to, okay, so we're going to let Annie cover this. This is the CARES Employee Retention Credit. This is a very significant credit that really no one's talking about. It's kind of complicated, so we're not going to get into a lot of the details. Annie told me earlier it's complicated for her, and she's a CPA, because you haven't had to deal with this before. But this is a credit that's very significant that, Annie, could you share with our listeners?
Absolutely. So good morning, everyone. This employee retention credit did come with the CARES Act, and it starts with wages paid on March 13th. So your first quarter return, 941 return, will not have this impact on it, but beginning immediately, you can start calculating this, and the first time that you'll file these credits will be on your second quarter 941. That's your quarterly payroll taxes. But this credit is up to a $5,000, which it's a 50% on qualified wages, and qualified wages are capped at $10,000. So you think $10,000 over, they're hoping it'll just be over a 2 or 3 or 4-month period that you would need this, and then hopefully we're all back to work and starting to make our money again and everything, and not have this extreme cash burden on us. So who is it for? Well, it's for businesses and exempt or tax organizations. And if you fully or partially suspended your business, or it's an or you've had a significant decline in gross receipts, then you can take this credit. So immediately, if you have payroll tomorrow and you have payroll taxes and you're eligible to take this credit, then you do not have to pay those payroll taxes. You don't have to pay the employer portion of Social Security, the employee portion, nor the employee federal income tax withholding. So it could be in a significant way that if you're not being able to get your PPP right now, if you're not able to get that really nice $10,000 from the EIDL, you can actually take this effective immediately.
So to be clear, it's a maximum credit of $5,000 per employee. So if you have 50 employees, it's $5,000 each. That's $250,000 against taxes that you have to pay. So Social Security taxes, withholding taxes, things like that. This is a very, very significant credit. It's only available to those who've been significantly affected by the pandemic, but it's something we encourage you to talk to your CPA about and check into, because it's a very significant credit that I'm hearing nothing about. I think it's a little bit complicated and people don't want to talk about it, but it seems like it's a very significant credit. Is that right, Annie?
Absolutely. And what's great about this is you can take it immediately. Right now, you're not waiting on somebody to send you money. It's just money that you're not having to send into the IRS. With every payroll, you have to submit your payroll taxes. Well, this is allowing you to not submit those payroll taxes, and you can start with that calculation as early as March 13th. So March 13th, you start with the calculation. So, catch yourself up to this next payroll and see what you can do to not submit all those taxes to the IRS.
Okay, let's keep going here. So here's this significant decline that we're talking about, a calendar quarter in which gross receipts are 50% less than gross receipts in the same quarter of 2019. So anyway, so that's a very significant credit. I really encourage you to check into. Here's how to claim it on your quarterly federal tax returns. And you can go to the IRS, and they've got a lot of answers to frequently asked questions on their website. And there's the website for the IRS. Obviously, you can get this off the slides later. We're going to keep moving here. We're not going to talk about the FFCRA payroll tax credit, but once again, it's a significant credit that we want to encourage you to check into. And there's obviously, you go to the IRS, and then there's this delay in payment of employer payroll taxes. Once again, it's a delay. You still have to pay it. We would encourage you to go ahead and pay it if you can, because you don't want to owe it later, but and not be able to pay it. But it's almost like a loan in a sense. It defers these payroll taxes until a later date. Okay, and then there's lots of other things the government's doing. It's very interesting. Let's say you're doing really well right now, and you want to make some donations to charitable organizations. There's some significant increases that you can make to charitable donations and still get a tax deduction that you would not be able to get before. And then talk about the tax deadlines real quickly, Annie, how they've been pushed back.
Sure. So if you want to go to that next slide, it's the July 15th is now your new due date for your 1040. That includes your quarterly estimated payment that's normally due on the 15th, all your C corporations and your trust and your gift returns. And then in Texas has, that's on the next page. Texas has also extended their dates for your franchise. It's not the payment and the filing's not due until July 15th. Quarterly unemployment, they're asking you to hold off on that. Their systems are so overwhelmed right now with unemployment claims that they're actually, the state has actually said, please do not file until after April 15th, and the filing has been extended to May 15th. But Texas is still saying you still have to make payment, but if you're struggling with your payments, they will give you some payment agreements, and you can call that Texas hotline right there.
Okay, we're not going to talk about this, but there's some other, like I said, there's just some other benefits that the government is extending. One question we've been asked is, have I missed the deadline? Is it too late? Is the government going to run out of money? Obviously, there's a lot of activity on this, and we're going to talk to John about this in just a second. But I believe that the government is going to pass another $250 billion. Take the slides down. They're going to pass another $250 billion to help fund the PPP. It's been obviously an enormously popular program, and almost everyone I know is applying for it, including nonprofits and churches. So, there's a lot of questions out there. John, there's people saying, hey, what's happening? I applied. I haven't heard anything back. What's happening? What's going on? Give us a general sense of what's going on. I know there's hundreds of thousands of people that have applied, organizations that have applied for the payroll protection program. Can you give us a general sense of what's going on and tell us what's happening with the applications and things like that?
Yeah, Steve. So, as an industry, not specific to First Financial, and then I'll speak to us and what we're doing. As an industry, this is unprecedented. Imagine every client that you serve shows up at your door on Friday and says, I want one of those things that you do. That's what happened to banks. So, couple of things industry specific. I do believe that there will be more funds. My only concern is some of the very conservative politicians are taking a lot of heat because this is public assistance, and it's the greatest grant ever given. I was flipping through the radio this morning, and one of the talk show hosts said, when did everybody become a socialist? And so I think if you look at this, it's a good program. It keeps our businesses going. It's going to keep our economy afloat. So there's a lot of reasons to do it. I do think it'll get done. We probably will run out of the $350 billion, the first pass. Last week, we talked about the numbers, 30 million people eligible to apply. I really didn't think we would run out until we took applications on Friday. Some banks have never turned the applications on. Some banks have already run out of their allotted funds. And the SBA was pretty clear in the beginning, go to your local bank, go to the bank that you bank with. There's a lot of regulatory and compliance issues around knowing your customer. So that's why it's going to be best served if you can go to your bank. Okay, so now to First Financial specific. The way the process is working for us, we've got thousands of apps company-wide on Friday. Each day we're getting more. Yesterday was the first day that I went home and felt like I actually made ground. Every day until Wednesday. Saturday, Sunday, Monday, and Tuesday, 12, 13-hour day, and went home with more work to do than I started the day with.
Sure.
So we have funded, as an institution, we've funded, at the end of today, we will have funded 1,500 loans for $285 million. So the money is flowing, the money is getting into accounts. We funded our first loans on Monday. I personally funded a loan on Monday. I've funded 11 or 12, so I've funded 12, and I've got 6 more that will fund today for my customers. So the PPP loans are real. They are moving. Steve, I asked earlier if anybody had got the EIDL. I looked through the responses. I don't think a single person said that they've received the EIDL. That really concerns me, especially because the SBA's website says if you apply, you get it within 3 days.
3 days, sure. That's what it says.
I mean, people have made promises. Steve, I can't pay you today, but if you can wait till Monday, I can get you paid because I've got money coming to my bank.
Yeah, right. And now are there's 2 questions, of course. Is the overall program going to run out of money? The question I have is how easy is it to get funded by the Treasury or the SBA for you? In other words, your organization has funded $285 million in loans. How easy is it to get that money from the government? Is just electronic and you just apply and they automatically send it, or how's that working?
And there's still guidance to come on that. So we're funding with our dollars. The expectation is that the SBA will buy the forgivable portion of these loans back if banks want to sell them. That's what the guidance says. I don't know what our stance will be. I don't know how long we'll hold these loans before we sell them back. Still kind of a process standpoint. Every bank's going to be different. And there's probably customers on this call from First Financial Bank that say, I haven't heard from my banker. And if depending on when you applied, that's absolutely correct. What we're doing, First Financial, pulling the curtain back a little bit, but I think it will help give context. We break into regions. So each region operates a little bit differently. So I'm only speaking to the 6 branches that I'm leading this program for. When we get your information, so when you go onto our website, you apply, we send you an email that says, this is what we need. When you send your email with your information to our region, I send you a template that says, thanks for applying. If you provided everything, great. If not, these are the things that we need. And we will be following up with you as soon as we possibly can. Then we're going through that folder in the order that they come in. We're working them. We're seeing if the information's there. We're doing the calculation. And then we would call you, if you were the customer, Steve, great news. I did the calculator. Here's the dollar amount we're able to provide you. Do you understand the rules? Do you understand the forgiveness? Kind of just a quick conversation to make sure we're all on the same page. I turned that over to somebody in Abilene. They submit it to the SBA to get our funding number. So at that point, you're guaranteed part of that $350 billion.
Gotcha.
So if your bank tells you you have an E-Tran funding number from the SBA, you can rest much more comfortably. For us right now, and our team, everybody in the bank's working overtime. But from that, the next day, we typically get documents. I would call you up, Steve, I've got your documents. I need you to come in and sign. It's the easiest loan closing ever. It's 3 pages. You would sign. We would fund your account that day. Okay.
So talk to me about the forgiveness portion of the PPP. How is it forgiven? When is it forgiven? How do y'all determine if it's forgiven? And the other question I want to ask is, are you checking credit scores on people, or is it just irrelevant since it's 100% backed by the government, by the SBA?
Yeah, we're not pulling credit. And that was guidance from the SBA. So, no bank really should be pulling credit on this. It's not a credit decision. If you just think about sound underwriting principles, most of these deals would be declines because you're coming to me telling me that you need it because your business is about to shut down. So if it was a credit decision, we wouldn't do it. It's not a credit decision. It's a need. It's guaranteed by the government. It's assistance. From the forgiveness piece, the bank doesn't make that determination. That's done by the SBA. We're still getting guidance. Again, we talked about it last week. A program like this would normally take at least a month in a rush. They did it in a week. The problem with doing it in a week is you leave a lot of things out. And a group of really smart people get together in a room and said, okay, we've covered this, this, and this. We've got it. And then it goes from those 10 people to 100 people. And they say, you forgot this, this, and this. And they go back and they address it. And sometimes, just like a lot of life, when you fix one problem, you created two more. So some of the guidance has contradicted the original guidance.
Yeah.
Amy is really my go-to expert on reading the bill and kind of digging in. She's done a lot of research. We've, and people can interpret this different ways. Another CPA in town said he got the calculator from 3 different banks and they were all different and they were wrong because his was right. And so one of the things that they were debating was whether you included your FICA taxes. And the legislation says you don't include any federal taxes, only state and local. And I said, here's the information. I think it was the National Association of CP. So we were trading emails. Here's the U.S. Chamber's guide. That's my favorite document. It's pretty good.
Yeah.
If you don't, he said, here's the National Association of CPAs. They say you do. Well, on Monday, the Department of Treasury and the SBA released a joint FAQ, and it said, do not. So I sent it back to him and said, well, your calculators, mine might not be right, but yours isn't either.
Yeah, and let's realize that the government had a very short time to put together the law, the Congress, and then that goes to, and so it's guidelines, it's the law, but they haven't figured everything out. Now the SBA and the Treasury have to figure everything out, all the details and things that weren't thought about. And so it's just taken a long time, and they're making changes every day, and I assume they will continue to for several weeks. So talk about the PPP forgiveness. What does that look like? How does that work? When will people know if something's forgiven or not?
Okay, so to the best information we have, which we have not seen what that application is going to look like, our understanding is that in 8 weeks, you will file with your bank for forgiveness, and that will be submitted to the SBA. So what you'll need to show is that you used at least 75% of these funds for payroll. Any reduction in payroll will be a reduction in your forgiveness. So that's head count. And also, no one can take more than a 25% reduction in wages as an individual. So if you lower your payroll by head count or actual dollars, you're going to lose some forgiveness. So the money is used for payroll, rent, interest on a mortgage, and utilities in the next 8 weeks, with at least 75% being used for payroll. Annie, that missed anything?
Yeah, that's right. And I think there's a lot of the regulations aren't totally clear on the definitions of all of those. So in utilities, that includes electric, water, transportation. That's an interesting one. We don't know exactly what they're going to say on transportation. It includes internet and telephone. And you're right, mortgage interest on debt, only mortgage interest though. It can be used for other debt, interest on other debt, but the only forgiveness is going to be the mortgage interest.
Someone asked me, for example, I have company cars and I'm paying interest on those company cars, company vehicles, trucks and things. Will that be forgiven? The answer is no. You can use the money for it, but it will not be forgiven. Another thing I think is important is that some people are saying, well, I'm going to, they approved 700,000. They're only going to forgive 500,000. The reason for some of that is that if you're an employee or one of your employees makes over $100,000, you can only apply based on the 100,000, and the forgiveness is, I assume, is they're not going to forgive any money that was paid for payroll over 100,000. Is that correct, Annie?
That's correct. So your payroll cost at initial calculation, that payroll cost number stays the same. So anything over 100 is not forgiven. And and it's 100 prorated. So even though I haven't made $100,000 yet this year, it's still prorated of what it would be annually.
Yeah, and then there's been a lot of questions about independent contractors. And so I'd like both of y'all to answer that. So here I am, I'm a company, and maybe I have 5 employees, but I have 15 independent contractors. Is that included in the calculations? How are y'all, and I know it's not clear, so has there been more guidance that we can kind of hang our hat on at this point?
There's significant confusion on what is on the calculation of payroll cost, and payroll costs are not independent contractors. Payroll costs are only your W-2 employees. So people are saying, oh, but they're my employees. They're my payroll, but they're 1099. No, they're not your payroll. That's a vendor to you. You have a contract with them. They're independent. You have a contract with them, and they're actually a vendor to you. They're not your payroll, so they cannot be included in that payroll cost number. But all those people that you are paying in as 1099 labor, they can go in themselves. And tomorrow, April 10th, is the first day that they can start applying. Banks are going to start looking at their Schedule Cs, and probably, John, you can address that a little bit better, exactly what you're going to be looking at for those 1099 contractors and your self-employed.
Yeah, I don't want this to sound judgy, Steve, but there's some things that we're seeing in this where people are not paying owners a reasonable wage. So I'm the owner of the company, but I make $30,000 a year. Well, I want to apply for my $300,000 that I take as my income. Well,
distribution, for example.
Yeah,
yes.
Yeah, you're eligible for $30,000 because that's your W-2 wages. Now there might be a second component tomorrow where you're able to get some of those self-employed wages back. And then the other thing is the 1099. The SBA has made it very clear. 1099, not employees. By definition, it's an independent contractor. And so there's some very, you should talk to your CPA and really question whether you're paying your people the right way. It's not going to help you on this. That ship has sailed. This was your 2019 number. But it is important to pay people the right way and pay the right amount of taxes. Tomorrow is self-employed and 1099. People will be able to apply. So I had an attorney that pays himself by 1099, but he paid his paralegal a W-2 wage. So he applied Friday for all of it, this past Friday, April 3rd. We told him he wasn't eligible for all of it. All he was eligible for is the W-2 wages of his paralegal. So we did that loan, closed it this morning. Tomorrow he will put another application in for his self-employment income. We suspect that we're going to use the Schedule C. We've got a call at 6 o'clock tonight to try to get final guidance. We are in constant communication with the SBA, so they're, and it's really tough to get through and get answers.
Now, one thing I want to also clarify is if, let's say you had paid yourself a salary of $50,000, but gave yourself a bonus of $50,000, that bonus is eligible under the PPP. It's just part of W-2. But if you had paid yourself a salary of $50,000 and did a distribution of $50,000, that distribution is not eligible for the calculation or loan forgiveness under the PPP. The other thing people are asking is, what if I have 2 companies? What if, can I apply for both companies?
Yeah, so that's the affiliation rule. So as long as they're told, if there's, and this rule's changed probably 3 times in the last 6 days, okay? Initially, they said that the SBA is very strict on size of companies, total dollar, aggregate loan amount, and affiliation. The last guidance, and so initially they said there was going to be no affiliation. So if you had 2 companies, they both needed it, they both fit the under 500, that worked. They came back early, I think it was yesterday, and said no, affiliation does count. So if you have shared ownership and the aggregate number of employees in all of your companies exceed 500, you would not be eligible. One of the big concerns we have is that's pretty common in the medical space, where one doctor has a clinic, has a partial ownership in a surgery center, partial ownership in 10 dialysis centers, that could be problematic. Now, the last thing that I saw, it was if you're a 50% owner. That typically doesn't happen in that space. So we are still seeking final guidance. But let's just say you have two companies. I have a customer that was in here yesterday. He owns a restaurant and he owns a Jostens franchise that does your caps, gowns, high school class rings. So his restaurant has 42 employees. His franchise has 20. He's eligible for both. 100% owner on both. The aggregate employees are less than 500. He can get 2 loans.
Yeah, and to clarify, what has happened is there's approximately 30 million businesses in the United States. About maybe 32 million. Approximately 24 million of those are self-employed or solo entrepreneurs that just have no employees. So they moved those dates for the application to April 10th because they didn't want to swamp the system with lots of applications for one person. So that's the reason for the April 3rd and the April 10th. They're trying to get the money out. They're trying to keep money flowing into the economy. And so they wanted to get the biggest bang for their buck. So on April 3rd, they said, if you have more than one employee, basically, or if you're not an independent contractor, then apply on April 3rd. So you may have 50 employees, one application, get the money to 50 people. And now, so now obviously they're processing a lot of those applications, as many as possible. Now on April 10th, which is tomorrow, that's when the self-employed, the independent contractors with no employees, people like that, they're now going to apply on April 10th and swamp the system again, of course, with a lot more of them than companies with employees.
Absolutely. And you know, the reason is to get the most money into the system, as you said. If you're self-employed, you're 1099, you're on a Schedule C, whatever that calculation is, it's only going to be for $100,000 of wages. So you would have to make if you made the max amount, your application can be $20,833. So we funded a deal today, you know, in our region for $966,000. So that keeps 80 people working while that single employee has to wait 1 extra week. Now, trust me, if you're that single employee, your problems are as big as the 82 employees at that other company, but it's kind of the greatest good.
Yeah. Okay. So lots of questions on, can I include PPP with EIDL? By the way, I said EILD earlier. It's EIDL. How does that work? The $10,000. How does that work? Should people apply for the EIDL and the PPP? How does the $10,000 work against the PPP? Could y'all give us some more insight on that?
Annie, you want to tackle it? You want me to go?
So you cannot, you can apply for both. You can apply for both the PPP and the EIDL. You cannot use the funds for the same thing though. So if you are applying for the PPP and you use your funds for payroll costs, you cannot use those same funds with your EIDL. With the EIDL, you can use that for maybe purchasing inventory, paying your vendors, paying your 1099 contractors, those are your vendors. Maybe paying your loan or other debt that you have that's not a mortgage and approved through the PPP, but you cannot use the same. And my understanding, John, you probably double check me, if you did get the $10,000, which sounds like nobody's getting, if you did get the $10,000 from the EIDL, then that will be counted against how much you can be funded on the PPP.
Yeah. That's absolutely right. So if you had already received the money, it would reduce your loan dollar amount. If you have not received the money, you get the PPP, you eventually get the money, it will reduce your forgiveness.
Okay. And also I think there's a $10 million max on PPP, $2 million max on EIDL. If you got 2 million, would that reduce the PPP to 8 million?
I think that's the case. I think, yeah.
That's my understanding. Check with your CPA on that. Okay, let's get to some questions here. I can't find a participating bank that will take my application. What do I do?
Yeah, it's heartbreaking. It's really disappointing that there would be banks, and there's a lot of good reasons not to participate in this. The interest rate on this loan is at 1%. It's guaranteed by the government. There's still going to be people that don't do it right, don't use it in the 8 weeks, try to carry a balance. That obviously, those economics do not work for a bank. A bank cannot have loans outstanding for 2 years at 1% interest. The way the program's designed, be used in 8 weeks, be forgiven, and it's done with. So we're having real honest, direct conversations with our customers. If you've laid off staff and you're not bringing them back, we're not applying for the max amount. We're limiting what you can apply for so that we know that it's used for the right purposes and forgiven. We also don't want to take funds out of the system that others need.
Yeah, great point.
But, you know, it's really disappointing that there are banks that aren't participating, because it puts, you know, I had a guy that I talked to today, his bank hasn't started doing applications. It's $400,000. That is make or break for his company and his, you know, 50 or so employees. I don't remember the employee count, but it was a good number. Those families thought they had a lifeline, and their boss is saying, well, I'm not sure today. Keep calling, keep searching. But we've made the very tough decision to take on very, very few new customers. The only new customers, because of the risk associated with this, and it's a character issue, and we don't get to look at your credit, the only customers we can take on are referrals from our very best customers or our very best centers of influence that say, hey, I can vouch for this guy, I can vouch for this gal. They'll do the right thing, they'll use the money the right way, and you'll get paid off.
Yeah, one thing that I haven't heard a lot about, but as I've talked to bankers and CPAs, is that there's some risk for the bank. In other words, you take these applications, you approve the loan, and then let's say that half the loan gets forgiven, but the other 50% of the loan never gets paid back. There's no collateral, there's no personal guarantees. So how do you get the money back? And then let's say that there is 100% forgiveness. And so you go to the SBA, you say, hey, we want our 100% forgiveness. Give us the money for the whole loan. And they go, oh, you did this wrong. You didn't check this box. You didn't ask these questions. And all of a sudden the banks has some risk to get 1% return. And they do get there is a loan origination fee, I believe, around 1%, John. The customer does not have to pay that. The SBA is paying that. But who wants to take on that kind of risk, not knowing if the government's going to come back and say, hey, you messed this deal totally up, and we're not going to pay you back. You're going to eat that loan.
Yeah. So if there's a problem with the loan setup, documentation, whatever, that, you know, SBA guarantee is great, but you still got to be able to collect those funds from the SBA. And even if you paid the loan off, but if you took the 2 years, you've also really hurt the bank by having that money outstanding at 1%. The origination fee that the SBA pays is 5% up to $350, 3% up to $2 million, and 1% over $2 million. So think about this, Steve. If I do a $350,000 loan, we're going to get $17,500. That sounds pretty good. And if you use it for 8 weeks, that was a great deal for us. We made money on that deal. Now, if we do a deal for $7,000, we made $350.
Yeah.
But let's take it even a step further. If we do a deal for $2 million, we get 1%, we get 20 grand. And we've got $2 million outstanding at 1%, even if you do everything perfect and you pay it off in 8 weeks. That's tough to make money at.
Yeah, so it's a very difficult situation. We encourage you to keep calling other banks, you know, but really if you can get, and maybe if you have to wait. Now, one thing that also is not clear to a lot of people, you have to keep paying your employees through June 30th. So here we are just at the beginning of April. And so April, May, June, that's 3 months. The government's only guaranteeing these 8 weeks. So if you're going to pay your employees for 3 months, a month of that, you're going to, in other words, if you wait till, let's say, May 1st, you've had to pay your employees for a month to get the 8 weeks of forgiveness. So in the 3 month period, you're going to have to pay a third of the payroll, right? And so it's not like you have to keep your employees on till June 30th, not just the 8 week period. I want to make that clear as well.
And that's where then some of these other payroll credits might be able to step in to help if you're not able to get back going and you've run out of that money from the PPP, to start using the payroll tax credits, because that's immediate help money as well.
What if people have not turned in their 2019 taxes or their 1099s or whatever? Is the government using the 2018 information? If they, obviously on the PPP, you've got your 2019 941s. So, but if you haven't done 2019 taxes, I assume the government's going to look at 2018.
What I suspect we'll do is we'll take the 18 tax return, since it's filed and official, along with a company prepared P&L or income statement. Because if you made 50,000 in 2018 or 20,000, or took a loss, and you tell me you made 100,000 exactly in 2019 on your company prepared financial statement, I'm not funding it at 100,000.
Gotcha. And I hope people understand that the banks they're making a loan, even though it may get paid back. They're loaning real money to people, and there's not any guarantee they're getting it back. The government's saying if you do everything right, and everything, and the employer, the company does everything right, then you're gonna get your money back. But there's some risk for the bank, so everyone out there needs to understand that as well. Here's a question: should I open a separate bank account to prove I use the funds on payroll, utilities, etc.? Do you recommend that? Obviously, you just got to track it, but would the bank prefer that, I guess?
We're not requiring that. We're not requiring that. You know, we talked about that, but we have capacity constraints throughout. So now if we make every person do a new account, now our new account capacity is back. That's a perfect example of fixing one problem created two more. Yeah. Initially, the thought was, let's make everybody have a separate account. That way we can help them with their forgiveness. This will make it simple and clean and streamlined. And then we said, now how do we feed 4,000 people through our new account system?
Mm-hmm. Yeah, right. So huge deal.
Just good logs. It's used for payroll, utilities, mortgage interest. I would set up an Excel spreadsheet, and we're hoping that this week we have the forgiveness guide, and that will answer some of these questions. But until then, if you got money on Monday from me and you're starting to write checks, I would tell you, set up an Excel spreadsheet, have those 4 categories, have the 8 weeks, and every time you spend $1, you put it in there, maybe footnote it with the check number, footnote it with the date that it went out through an ACH if you use a payroll service, whatever that looks like, where it's simple and clean. You get all your money forgiven. Nobody wants to have these loans be a loan. The borrower should want it forgiven, and the bank certainly wants it forgiven.
Yeah, I hope everybody understands that. The government wants to pay this money. And so if you do it right, the bank will get they'll be guaranteed to pay the money back, get the money paid back, and your loan will be paid off by the federal government. Here's another question. If someone fires employees for cause and immediately replaces them, will that negatively affect the PPP repayment calculation?
Okay, great question. And that's an important one. We talked last week a lot of the technical side of it. This week, we're talking more about the execution. But let's go back and talk about that technical side. It's your payroll as of February 15th compared to your June 30th. So if you had 20 employees making $5,000 each on February 15th, you need 20 employees making $5,000 each on June 30th. It doesn't have to be Steve, Annie, and John. It can be Jill, Joe, and Bob. But if you had 20 then, you need 20 on June 30th.
Now, we say on June 30th, you mean you got to keep 20 every day through June 30th?
Yeah, so just a minute ago, you and Annie kind of talked about that. That's where the original bill references February 15th, June 30th. And so I was just on an internal call with a colleague from Bryan College Station, and he said, this is what I read. It says your February 15th and June 30th have to match, but I've got a retail shop, and the likelihood of her being able to open up on June 1. So the next 8 weeks are great. She can pay her employees, stay at home, They don't go on unemployment. That's the intention. That's fantastic. That's awesome. Every day that passes, I would say the likelihood of that shop opening on June 1st is less. And if it does open, let's say a restaurant, are we going to go from 0 to 100? Are we going to say you can't come in the restaurant at all? And in Dallas County, I think that's through May 28th, something like that, right? So it's pretty much the whole month of May. Can't come in the restaurant at all, to opening the doors and putting every chair out. I suspect, and this is just a guess, it'll be some kind of phased rollout. It'll be, you can have 50 guests at a time. Well, if you've got a big restaurant that holds 400 people and you get to open on June 1 with 50 tables, you're not whole. You'll still have economic harm. So the way that this reads, I do believe for forgiveness, you have to have those employees on your payroll June 30th. So this would take care of 2/3 of that. However, I suspect that the SBA will soften their stance on that.
Okay.
I think just like what we've seen with all of the laws, it is a daily change. Every day, John and I are looking back and to see, well, what changed today? What do we need to update our clients and others about? And I think we're going to see a change with there, because when they put this law together, they had no idea how long the coronavirus was going to last or the impact that it's going to have next month. They have no idea. So I can see those being changed.
Yeah, I got a lot of questions. We've had 68 questions so far. We have a list that we still haven't answered from last week, and I'm getting emails every day. So let's keep going with questions. I know, John, you got to step off here in just a little bit. I'm a manufacturer, have practically no business. I would like to wait and bring back my employees as long as possible, but I don't want to risk the government running out of money to loan. How long should I wait?
So remember the spirit of this bill. Remember the spirit of this bill. In 2008, 9, and 10, the government expanded unemployment to 18 months. You got laid off. You went home. There was some disincentive to work for a great number of people. They collected unemployment. When businesses ramped back up, you called your employee and said, hey, come on back to work. And they said, hey, I'm good. You know, or your employee, that unemployed person found a job, but they were making $100,000. The best job they could find today made $50,000. They said, I'll just stay on unemployment before I do that. So the spirit of this bill is, instead of funding the unemployment system, the government is funding business owners to not lay people off. So if you furlough them or lay them off for 2 weeks and then get the money and bring them back, you've harmed your employee, you know. And I get it. It's a very, there's a moral, ethical, business, economic, religious dilemma here. Like in 20 years, this is going to be a Harvard business case, right? Steve owned XYZ business. He operated this way. Annie owned ABC. She operated this way. You know, this will be in every business school's ethics class. Somebody's going to do this right. Somebody's going to do it wrong. And we don't know what today that looks like. I would say if it's my business, if I can get this money today and I can keep my employees with their payroll, even if they're not coming to work, I'm doing it in a heartbeat. Because I know if I send my good employees home for 2 weeks, our relationship is damaged. I will never look at that boss the same. And even though they had to do it, I understand what, you know, I think for somebody being laid off, the person that laid them off, it's probably just as heartbreaking too. Nobody wants to do that. But I think but if you can keep your employees on, that's what you should do. And then that also prevents a disruption when your business ramps back up. You're not scrambling to find talent. You know, DFW will recover the fastest. Mm-hmm. We live in the world's best economy. And for the last 10 years, I've been told by almost every business owner I talk to, whether it's a law firm, accounting firm, to a plumber, to an electrician, John, my biggest struggle is finding good talent. I can't find enough people that want to work. So don't let that person come off your payroll that you're happy with over 2 weeks' pay.
Some people are hiring right now. And so if you can, I think as a Christian, I would encourage you to do the PPP. And if you have to pay, if your employees, you don't have anything for them to do for 3 months, man, send them into the inner city and have them paint. You know, what we did when we had slow times at our company, we never laid anybody off in 20 years, didn't have one layoff, not one person. Did we get slow where we had no work for them? Of course, we were a construction company. So we would go to churches and we'd say, can we paint your building for you? We had houses that we would have a flood. We rip out all the sheetrock and replace it. We paid for everything because God had blessed us and we could do that. But we look for, if you're going to be paying your employees and there's nothing for them to do, man, go help homeless shelters. Obviously, with the whole social distancing, you want to do it safely and all of it. Go find something for them to do, and then if you keep them on for 3 months and have to pay for a month of that, they will never forget that. We had the greatest loyalty at our company because people knew we didn't lay people off in hard times, and because of that, in 20 years, we did 125 doctor's offices a year. We had one employee go to work for a competitor in 20 years because we treated them right, we treated them fairly, we blessed them, and when times were hard, we set up a surplus, just like Joseph did for the 7 years of good years, to prepare for the 7 years of famine. Obviously, we didn't ever had 7 years of famine, but we set up a surplus so we could take care of people during hard times. And let me say that as well. People as Christians say, should I take money from the government? Joseph was the number 2 guy in the government. Joseph was the number 2 guy in Egypt, and he laid up grain so that when the famine time, they could give the grain to people. Now, what's interesting is Joseph made people pay for the grain. And then when they ran out of money, he took part of their land. The government's being much more gracious than that. People take money from the government all the time because it's not the government's money, it's our money. So as a Christian, I really don't see anything wrong with this. I so appreciate the government saying, we're going to treat nonprofits and churches just like any other business, and they're eligible for the PPP. Now, and let's not forget that there is this EIDL, that's a loan that the government's, for nonprofits, it's 2.75%, for for-profits, it's for-profits, corporation businesses, 3.75%, but you can get a loan from them if you qualify and are approved. Let's go to some more questions here. Is it okay? Well, let me do something different. I'll ask that here in just a little bit. I run a dance studio. We have gone to online classes. Even though we're still operating, we've lost about 10% of our dancers. We have the money now to pay rent, payroll, and bills. However, the summer months are slow, so this virus will take away all of our reserve. We don't want to ask for assistance unless absolutely necessary. Is this a bad move? Yes, that's a bad move. Ask for assistance. This is your money. This is your money you've given to the government. And listen, this government's gone so far above and beyond to make sure there's no requirements on this. They're not asking for a personal guarantee. They're not asking for collateral. They're wanting to help the people. I so appreciate this. And yes, you need to get assistance and it goes on to say, if things don't return by May, we will suffer tremendously in the summer. Yes, take the money from the government if you can. So, all right.
Steve, let me weigh in there real quick, if you don't mind. So I got a call from a executive director of a very large Dallas nonprofit. She's a former attorney. And so she said, I struggle with this because one of the certifications is current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And so much like this person that you just read the question from, they struggled with their business is still okay today. They still have funds. They have reserves. They have an endowment in this case, and that they would be okay. But they've already lost out on millions of dollars of fundraising that would have happened between galas, golf tournaments in this time period that they've already canceled. And you can't have everything in October, right?
Yes.
Only so many things can get moved to October. You know, are we going to big fancy galas on Monday night in October? Because that's what people think is going to happen. So I told her, I said, if you don't have economic uncertainty, I don't know that you're being a realist, right? How can you, and this lady's great, and she has the heart of gold, and she's fierce, and she does a wonderful job in her business. And I said, I would just think about it, because if you deplete your reserves today, and this goes on, and it looks like Italy, and everything's locked down, and the money's gone, you can't go back. You can't go back. So if I was a for-profit, I get the money, my employees still go to work. At the end of it, I don't need it. I can pay my brother-in-law's truck payment because he was laid off.
Mm-hmm.
I can give it to my employee because Steve's wife was like, there is a time that God has given us this great gift through the government. You can turn around and be charitable.
Yes, absolutely.
Don't get a new boat.
Yes,
don't, get a vacation home. But do good
you may
work.
want to get a new boat and a vacation home about 3 to 6 months from now, because I think they're going to be fairly cheap, but not now.
Yeah.
Sorry, a little levity there. We saw a meme the other day that said, who's going to pay for this $2 trillion? And Carrie Job and Cody have written this song called The Blessing Song, and it goes, your family and your children and their children and their children. Okay, just a little levity there to break the Annie, can you address if businesses can do the employee tax credit and the PPP?
That's a good question, and I am sorry, I do not fully know that answer. Okay. I'll have to look into that.
Yeah. Okay.
I think it's reduced or eliminated, but yeah, that's brand new guidance, right? I mean, that's kind of hot off the press, and so tread lightly there.
Yeah. Okay. We are told never to make big decisions in the midst of very challenging times. Would it be wrong to decide to close or stop big projects or moving forward in light of all this? Will this be seen as a lack of faith? I don't know who told you to never make big decisions in the midst of very challenging times, and this is anonymous, but you were told wrong. I mean, that's when you have to make big decisions in the midst of challenging times. And that's where, as Christians, we have the guidance of the Holy Spirit. We have the principles of God's word, and we need to be able to make big decisions in challenging times. Now, would it be wrong to decide or close or stop big projects and moving forward in light of all this? Would it be seen as a lack of faith? Absolutely not. Faith is hearing what God says and then obeying what God says. And so if God hasn't told you to move forward with the project, or if he's told you to shut the project down, shut it down. Don't move forward. That's not a lack of faith. Faith is literally hearing what God says or getting a rhema from God about what God wants you to do in a certain situation, and then obeying that, whether it's to move forward or to shut a project down. Okay, let's keep going to some other questions here. Could you talk about employers who've already had to lay off people? Are you encouraging them to bring them back? I think we've kind of talked about that, but I've got a question about that. So I'm just kind of wondering, what are we thinking there?
I think that goes back to the spirit of the whole thing that John addressed a little bit earlier about trying to keep everybody from pounding on that unemployment door and allowing them to have a job. So even if, kind of going back to that manufacturer, I've talked to many of my manufacturers, and I've said, you know what, why don't take this opportunity? You've got people bring these people back onto your payroll so that they can have a check, so that they can pay their mortgage and they can buy food for their family. And why don't you clean up your place and get it all ready, because this will come to an end, and then your probably orders are just going to double and triple, and you'll be busy for the rest of the year. So to get sometimes we put stuff to the side saying, oh, that's not important. And so several of my manufacturers, they brought their employees back on. They're getting reimbursed through the Payroll Protection Program. So it doesn't cost them a penny to bring them back on. They're actually working, and they're going to be ready for those companies as soon as they can start production again.
That's a great answer. I have a team member already scheduled to retire on May 21st. Will that impact my FTE, full-time employees, over the 8 weeks after a loan, since it's not a layoff and it's not a furlough?
It will impact it, because it's going to be FTEs at a certain time and then FTEs at a later time. I think that later time date could could change, or there'll be modifications to that. But
Mhm.
but you're going to have at least probably that standard from February on your FTE count.
Okay, here's a
Yeah.
great question. Go ahead, John. I'm sorry.
Yeah, I mean, so if that person's going ahead and retiring and you need them to run your business, you're no worse off for it. If this didn't exist, you would pay them anyways, right? Now, if your business is reduced and you're paying them to stay at home and they're retiring, when I think about retirement, that means I've probably been there a long time. And if I have to pay their 8-week salary and I can afford to, I'm going to out of loyalty. I think there's an economic question there. And then there's a moral question that's harder for everyone to answer.
That's absolutely. Here's a great question. What if you left out health benefits or anything else? You made a mistake on your application. How easy is it to amend the application?
Okay, so speaking from our bank experience only, once we get that E-Tran number done, we're done. Now, if you catch it early, and I haven't submitted it to my processor to get an E-Tran number, we can change it.
Okay.
But the dollar amount is locked in.
Okay.
Once it's the SBA system.
Okay. And by the way, if you're going to, so basically you're going to have to email or call your banker and try and change your application. Once it's gone to the SBA, done. And here's another thing. Just because you qualify for a loan doesn't mean you have to take all the loan, right? You don't have to. And so, because, for example, let's say you can borrow 100, but only 80 is going to be repaid. Well, borrow 80 then, or borrow 100 if you know you're going to be able to repay it. As an event planner, should this be something PPP I think she's talking about? Is this something I should consider? I currently can't work and I only have contracted staff.
So right, so if she pays herself W-2 or 1099 or on the Schedule C, then absolutely. I mean, your business has been significantly impacted by event planners. I think of all of the weddings that have had to be canceled or to go on Facebook or online, and every other event has had to cancel. So you can apply and help yourself out. Absolutely, that's giving you opportunity to do this. As others are going to go to unemployment, this is a way for you to get money to continue to live and not go to unemployment.
Okay, here's another question. Is the employer match on a 401k plan included in the, or a 403b if you're a nonprofit, is that included in the forgiveness part of the PPP?
Yes, that is included. That's part of retirement plan money paid, and that is forgiven.
Okay. Thank you, Annie. So how would a real estate agent do this? Would you take the total gross commissions earned in 2019 and then divide by 12 to get the monthly payroll and then multiply by 2.5?
They're going to be, I think, they're going to be getting more guidance, I think, tonight, but it's really that net income, and they're going to go off of 2019, 18 tax return in 2019 if the return is done, or your 2019 financials. And I think they're going to look at if there's significant changes. It goes to what the bank feels comfortable with.
Yeah, I mean that, if you made $100,000 in commissions, but you wrote off your car, your house, your cell phone, apparel, and you filed taxes on $20,000, that's going to be the number that we consider.
And the amount, even though your 2019 tax return might not be done right now, by the time that the forgiveness is starting to take place, then it should be done, or I'm sure the banks are going to require that to be done to prove what the forgiveness amount is based on that 2019 return.
That's a great question, John. So here you are, you apply for your loan based on your 2018 tax return. In the meantime, you do your 2019 tax return. How does that work? You see what I'm saying?
Yeah. So Steve, earlier you mentioned the risk to the bank, and initially on the application, it said something to the effect of your bank is responsible for certifying the loan amount request is right and American Bankers Association said, not going to happen.
We're not going to do that. Are you kidding me?
Yeah. I mean, I can't take responsibility for your numbers. So the SBA, one of the nice things they've done for banks is said the person is responsible for coming up with their number. The applicant is responsible for coming up with the correct number. And then the bank performs a cursory and reasonable check. Now, what's reasonable today is probably pretty flexible, and what we're afraid in 8 weeks they say, hey, dumb banker, you should have done more.
After the congressional investigation, you know, a year from now, hey, Mr. Banker, we want the money back that we gave you. You didn't do a reasonable check, right?
That's our fear, right? So every bank's gonna treat it a little bit differently. Like I said, that CPA told me that, you know, he had seen 3 banks calculators and they were all wrong and all different. If you talk to 10 bankers at 10 different banks, you're going to come up with different stuff. As First Financial, we've got our guidelines, what we feel like is a reasonable cursory check, and we're not funding more than what we think can be supported for forgiveness.
Here's another question. I have a new business. I think we addressed this last week, but I have a new business that was getting started October 2019. So I don't really have the history to show of W-2s or things like that. What do I do? I mean, I've got a W-2 of a business just starting. Can I use, let's say I didn't even pay myself in 2019, but now in 2020, I started paying myself a salary. Can I use my 2020 W-2s?
Well, you won't have a W.
Go ahead.
You won't have a W-2
W-2s,
yet,
your
right?
951s. Yeah.
So what we can do is we can look at your January and February. So we had a healthcare facility, sizable facility that somebody bought on February 1. And so they don't have access to the old owner's records. So we used their 2 pay periods that they paid in February and just took that over the course of a year to come up with their number. So if your business was low in 2019 and it's grown in 2020, those people, unfortunately, it's the 2019 number. It's different between my business grew and my business didn't exist. So if your business is a true startup in 2020, as long as it was open by February 15th, we can get you a number.
Okay. So here's a good question that because it's a question that is showing, okay, we're not quite getting this, so I'm going to ask the question. I think we've covered it, but we're here to help answer people's questions, and we are so familiar with this. We've been in this for 2 weeks now, 3 weeks now, just digging in, trying to figure these answers out. And obviously, this is very new for very many people. So our business is currently closed. The government will not allow us to open right now. If we can't open until June 1st, we cannot. Okay, my deal just changed. Hang on, just let me find it again. As you send in questions, it knocked it out here. Basically, and I cannot find it now. So what they're saying is, so I don't have 8 weeks of payroll, I think is what they're saying. Let me see if I can find this.
Well, that kind of goes back to, even though you can't, you could put them back on payroll. You could still, you're getting that loan for 2.5 times your monthly amount, right? So you get that loan for your 2.5 times your monthly amount. You get forgiven for 8 weeks. They don't have to be working with you at your office. They could be at home doing something, but you're going to get reimbursed for that 8 weeks of payroll. If you don't have any payroll, you're not going to get forgiven for any of that, and you have to pay all of the money back. So again, if you keep them on your payroll, then they're there, they're ready to step in as soon as you can start working again, and you're keeping them from going, flooding the unemployment office, and having a job for them, giving also them personal security, that hopefully that you are going to have a job for them, and that's going to be able to get open here in June or so.
So what about this strategy? How do y'all feel about this strategy? Okay, the government shut me down. I laid them off. Okay, now they're on unemployment. They're getting full benefits, full salary for 2 months. I open back June 1st. I just rehire them again. Or I apply for a loan, only half the loan that I need to pay them for for 4 weeks instead of 8 weeks. Is that, I mean, it feels like it's government money either way. The government's saying, we're going to pay it either way. Now, obviously, some unemployment state, but the government's now, the federal government's actually, the way I understand it, is funding some of the state unemployment programs. So some of it's state, some of it's federal. Does that make sense? Is that a good strategy? Is that everyone feel good about that? Or
the government is funding that 600, they're giving an extra $600 per week and helping with unemployment so that the amount that they receive is a little bit higher. You know, I think that becomes an internal business decision for you on, do you want to make sure that you have these employees, and how are, you know, you taking care of them? Are they going to be there ready for you? And if you do have extra things that they could be doing, just getting prepared or helping out so that you can bring them back on. And that 8 weeks, it's not, you're not going to be out the money if you do bring them back on. And there is a provision in there that if you have laid them off, you can bring them back on and you won't be penalized for that.
So that is one strategy, right? I mean, because you're sitting here, I'm sitting here as a business owner. I'm sitting here going, I can't even get a hold of a bank. I don't know what to do. I mean, my bank isn't a part of an SBA program. Maybe I'm in a small town somewhere. My bank's not part of an SBA. I can't go anywhere else outside the town. But I think maybe I can get some PPP a month from now, let's say. And so is it okay morally as a Christian to lay these people off knowing they're going to get unemployment? And maybe, like I say, if they're less than probably $60,000 to $70,000 in wages, they'll get full unemployment. But I still apply to the PPP. Maybe I get the money a month from now, and then I use that money to bring them back on and pay them. Is that okay? And is that a legitimate strategy from a banker and from a CPA?
I think every business has to right now kind of look at how much do they really do need to tighten their belt as well. Like how much fluff you might have had there in your business. I mean, you're running a business, and so many of your employees are your highest expense. Your employees and your materials if you're in manufacturing. But it's probably a mix. I would say there's a mix in there, Steve. A little bit of tightening your belt and getting help from the government and seeing what you get. Because if you do lay them off, it is nice to know that they're getting $600 a week more. 6 times 4, that's $2,400 more money that they would get from unemployment if we weren't going through this. So the government's helping to take care of those employees there, and you tightening your belt and seeing what you can do to keep your current employees and not have to retrain them or retrain new people later on.
Yeah. $600 a week's $30,000 a year. I mean, it's a significant amount of money. I mean, they don't get the $30,000. I'm just saying that's the equivalent of 30. So someone was making 60,000 and ordinarily they would get 30,000 on unemployment. Now they're going to get 60,000 on unemployment, right?
There's a moral case that out of mercy you would lay someone off and let them file for unemployment. That's not the spirit of this in general, but if you can't bring them back at a rate that was equivalent to what they earned, you can absolutely make the case. You know, this single mom, she's the sole provider for her family. There is no cookie cutter answer. This is unique to every individual business and their set of employees.
I agree. So I want to ask one more question. We're going to wrap up here. John, I know you've got to go. So payroll tax credit, what is the negative impact to gross receipts that triggers the ability to take advantage of the payroll tax credit?
Or this. I actually need to go back to my notes on that one.
I think it's 50%.
Yeah, there's the payroll tax credit, and then there's an employee retention credit. Yeah. I think you're talking about the employee retention credit, and yes, so it's the calendar quarter in which gross receipts are 50% less than gross receipts in the same quarter in 2019. And it continues until the calendar quarter in which gross receipts are greater than 80%. I can help give you some more direction on that and guidance, or direct you to a place. There's some good FAQs on the IRS website.
Okay, so we're going to have to end here. I want to share something, and John Annie, thank you so much. This is 2 weeks in a row, and we may do this next week. We're praying about it. We have a lot of questions we've not been able to get to. We still have over 150 people online. And so we're probably gonna do this next week, or send out an email, or do something to kind of answer some more questions. I want to say this. One of the most difficult times in my life was I was a young man in the 1986 real estate crash. And I was laid off. I worked for a construction company. It was a large company, probably had 250, 300 employees. Our Congress really messed it up this time, crashed the real estate industry, crashed the construction industry. I was actually the last person hired at this company. I was the last person laid off, but I was laid off. And it felt like my world was crashing in. Here's a real estate crash, a construction crash. I'm in the construction industry. How am I going to find a job in the construction industry when it's in the deepest recession since the Great Depression at that time? And I was a Christian. I've been a Christian about 5 or 6 years at that point. And so I was desperate. I didn't know what was going to happen. I started losing some of my hair. Because I was so anxious, very young Christian. And can I say, that was the best thing. That was the best thing that ever happened to me for my career. Because of getting laid off, I ended up about 6 months later starting a construction company. And then God blessed our construction company. I actually ran it for 2.5 years. It was owned by someone else. I was a minority owner. And then 2.5 years later, I started our construction company that we ran for 20 years and then sold a few years ago. What looked to be such a bad thing became such a good thing. What seemed like was the worst thing that could happen to me for my career was the best thing that could have happened to me for my career. So I want to say to the people watching today, listen, God can turn this around. We're all familiar with the story with Joseph and his brothers, where he said, what y'all meant for evil, God meant for good, when they threw him in the pit and became a slave. And so I want to encourage you today. I want to encourage you that things look very, very difficult, but God's not surprised by what's happening. God is in control. And I really want to turn to you today and say, is God trying to speak to you in this? Is he trying to get you to change something? Is he wanting you to repent? When I say repent simply means change your mind. Were you maybe too focused on business and not focused on God, and he's getting your attention? If that's true, this is probably the best thing that's ever happened to you for your career or your business. And so I just want to encourage you to press into the Lord today. He does have all the answers. He's got all the money in the world. This has not bankrupted God by any means whatsoever. And I know people are going through some very, very difficult times. I so appreciate our government stepping up and using our money to help us and encourage us and strengthen us. And so if we can help you or strengthen you, we're going to put our contact information up on the screen here in just a second. We want to help you. And so we appreciate your questions. We're going to pray about doing this next week if there's a demand for that. And once again, John and Annie, I want to say thank you so much. What a blessing for y'all to bring y'all's expertise to these very troubled times. I am not trying to in any way mitigate what's happening out there. It's very, very difficult. But I do know that God has an answer, and he will, if you will draw near to God, he will draw near to you. That is his promise. So Father, we just thank you that you're a good God, and that, Lord, you love your children. And Lord, I pray that many people, because of this, come into your family, because that'll be the best thing that ever happened to them. And so Lord, I just thank you. I ask you to give people out there wisdom and knowledge and understanding, revelation about what to do or what not to do. And Lord, that they would turn to you with all their hearts. They would love you with all their heart, soul, mind, and strength, and love their neighbor in this season as themselves. That we would walk in a spirit of love and truth, and that we would also be your hands extended to people that need it right now. In biblical times, people who had a surplus gave to those who had a need. And Lord, I pray that we'll have a heart to do that during this season as well. And so, Father, I thank you and praise you in Jesus Christ's name. Amen. Thank you, John. Thank you, Annie. We so appreciate your help today. We can put this on the screen, our contact information once again, and we will continue to try and serve you and help you. And please contact us at the, was it info at the Kingdom Business, questions at kingdombusinessleaders.com. Thank you so much for being with us today, and God bless you.
Thank you.